What I said is that when the market is down, it has more volatility. More volatility means more profit on the other side. Let's look at our corporate accounts and see what happens there and where are they at the moment. The first account that was started 19th of May 2022. This was the first corporate account that we started, and the purpose of this account wasn't to make money. It was mainly to present what is the possibility with EazyBot, because the only question that we didn't want to answer was how much can I make per day, how much can I make per month, how much can I make per year, and so on, because that number is not defined, and you can never define it 100%. Whoever tells you that there is a fixed exact amount that comes every interval of time, that means something is wrong and we need to double check what's going on. That's why, to answer that question, we always direct people to look at our corporate account, even though this is not a guarantee of future earnings. But what we do is that we know that the bot is going to work in all the market scenarios and is going to be making profit, and end of the day is going to be closing all the cycles with profit. It's just a matter of time, and this account is a proof. This account was opened 19th of May, as you can see, 2022, and in 848 days we have seen 100% profit in this account. Here we haven't guessed which coin is going to be the best performer. We just diversified equally in all the coins that were available at that time for us, and we had 19 coins, and as you can see here, they had different kind of performances. Solana, for example, made the maximum profit of close to 200%, and the least performer was TRX, which made about 40%. The average is 100%. After a couple of weeks, from 848 days, all the bots have closed with actually realizing the 100% profit. Because how it works is that we're not doing leverage, we're not doing shorting of the market at the moment, we're only doing spot trading, which is the safest type of trading online. And on spot trading, the only way you make profit is only buying low and selling high. And we are depending on the micro movement or on the small movement that happens every day, the 1 to 5%. And the bot is buying and selling within that intervals and making small profits. The small profit in the down market is used previously to pull down the average price from the top to meet the price where it is, and then close that average price and then get out of the market. With the new strategy, the SBS, it's actually even more advanced and closes the cycle quicker, because we don't pull down the average price anymore. We use that profit, 50% of the profit, to actually close the top trades. So should the market goes down, you don't have to add more funds from pocket. What you need to do is just wait for it, and it's going to be closing that top positions quicker, and use that same budget that you use for the top positions by adding more positions in the down market, and that will help more sustainability. And we have seen that in our own account within this downtrend that happened in the last couple of weeks, and all bots were working fine without any problem, and we didn't have to add any funds to our own corporate account. Anyway, this account had more than 27,000 trades, as you can see here, all spot trading. The second account that was opened 1st of January 2023, this account is still on. Most of the bots have closed once we realized the 100% profit in 849 days. We put all the bots in single, and some of the bots are still active. So we're waiting for those bots to close so that we can close it and actually realize the 100% of the profit. And in this account, as you can see, that I always explain in the previous account, the best performer for most of the time was Matic, which is now changed to Pro. So if you look at the second account, Matic is the least performer. Now that proves that we should never guess which coin is going to be the best and put all the funds in it, or put majority of the funds in it. The best way is to really diversify as many assets as possible, because we never knew that Solana is going to be the best performer. We never knew that AAV is going to be the second performer. It's going to make 200%. And we never knew also that Matic is going to be the worst performer in this portfolio. So the best way to do it is to diversify in as many coins as possible, and then you're going to have a good average or portfolio return. So this account had over 70,000 trades now, I guess, or more than 65,000 trades, because we stopped reporting here once we saw this 100%. Right now, I think there are 4 or 5 bots still to close. Once they close, we're going to be showing the actual funds in the exchange that shows double of the invested amount of 14,500. That means going to be more than 29,000. A third account that was started in this year, beginning of this year, and this account is running now for the last 342 days. And I think this year was one of the worst years in crypto, with the downtrend that happens after people were expecting that bull run is going to happen. But anyway, this is started with the SBS, the sliding blockchain strategy, the first account that started from the beginning with the SBS. And we have seen that all the bots are running and they never stopped. Even though for some of the coins, the market went down for over 70 and 80%, but still, because of the sliding effect, it closed the top positions and adds to the bottom of the market. That kept the strategy sliding with the market as the market is going down. And that's exactly how it's meant to be, because you cannot trust the market. You cannot trust that the market is going to go in the direction that you're guessing it's going to, because it could just reverse at any point of time. That's why you just need to let the bot does what it has to do. If you believe in the strategy that we have built, if you want to make your own strategy, obviously you can do your own settings, as many people are doing nowadays. So this account is at close to 20% now, and the best performer is XMR. Again, that keeps on proving itself over and over and over again. So the first one, we had Matic most of the time as best performer. The second account, we had Solana most of the time and AAV as best performers. In the third portfolio, we had one that we never expected. It's XMR. It happened to be the best performer. While here, if we look at XMR, it's selection number 1, 2, 3, 4, 5, 6, 7, 8, 9. Number 9 from the top. It was never near number 1 or 2 or 3 or even 4 or 5. And here, if we look at XMR here, it's actually number 1, 2, 3, 4, 5, 6, 7, number 7, but from the bottom. So it's below the average. So that you cannot really guess which one is going to have that jump, which one is going to have that kind of fluctuation, and so on. So the best way is to really diversify in as many coins as you could. This is the challenge, the new challenge that I started in May 13th, 2025. This year, the purpose of this account is to convert this 1,600 USDT into $1 million. How are we going to be doing that? Is by doing a weekly contribution of just $25 for the first period of time until we hit the 10,000, and then we go to the next stage and when we add more. So we're using 4 items here, or 4 things to raise this account, raise this trading capital from $1,600 to $1 million. Number 1 is we're using the profit of the trading that's going to happen on a daily basis. Number 2, we're using the auto compounding, so the account is all in auto compounding. Number 3, we're using the time. We're giving it the time that it's supposed to do. And number 4, we're using the contribution, which is really magical. I mean, you keep on adding funds as the every week on a regular basis, regardless whether the market's up or the market's down, but you're increasing your capital in a consistent basis. And all of these 4 factors are going to help this account to grow to the 1 million. How long will it take? Nobody knows, but we'll just keep consistently doing it until we see that $1 million in the account. So right now we're at week 30. We're 30 weeks. If you see here, this shows you the capital that we started with, the 1,600, and then you see the contributions, and here you see the profit. And as the time goes, this will keep on increasing and increasing as it keeps on compounding. Last thing here, we have started a newly Bitcoin growth bot account, and we started by investing 0.3 Bitcoin in this account, distributing that amount equally on 15 coins. So we have 0.02 BTC in each of those spots, trading different coins, starting from XMR all the way down to, I think this is BNB. And why did we choose those 15 coins? Because we're trading in KuCoin. And on KuCoin, those are the ones of a higher trading volume. As you know, in trading, we want to have big trading volume to avoid slippage and losses. So this account right now, if you look at the portfolio, it's at 2.3% profit. That means we have increased the quantity of the Bitcoin that we're holding by 2.3% in 55 days. And the best performer here is XMR, and it made already over 12.7%. The least performer is BNB. It made over 0.33%. That's all for the accounts. Now what I want to do is take you through a short journey into one of the accounts that I actually showed yesterday in the bot talk. Many people are fearing the market when the market is down. Many people are fearing the market when they see downtrends, but they don't see the opportunity. As you saw in the video that Martin played today, that during the down market, you have more volatility. And the volatility is the fuel for the bot to make more profit, especially with the EazyBot strategy. We depend on volatility. So when the market is down, you have more volatility and you have more possibility to make more profit. It will make profit in all the way in any kind of market, but you have the possibility to make more profit when there is higher volatility. So we'll go through a couple of accounts that were open during this bad time, as some people are saying. It's bad time. I don't call it bad times, but for some people it is. I have the reports here that we built together actually during the call yesterday. If you was in the call yesterday, because I don't have that account open, but we'll go through it like this. So here what you see on the left is the capital assigned to those bots. That's one single user, by the way, who was adding funds as the market's going down. So the first group of bots, those here, they had more, but we just chose a couple of them. Those are running for 74 days. That means this bot started 74 days back. And this bot started 72 days back. This bot started 22 days back. Those bots started 4 days back. And those started 3 days back. Anyway, the story here is that those bots were started when the market is down, where the market was actually going down, moving down. If you look at 74 days back, like 2 months from now or 2.5 months from now. What I did here is that I made a formula of looking at how much profit this bot have realized so far, net profit after all the fees, and the number of days that was running, and I divided just the profit divided by the number of days to have the average daily profit multiplied by 30. This is the average monthly profit based on this data here. And here we looked at the profit percentage by dividing the monthly profit divided by the capital. That gives us the average monthly profit based on this performance based on the data that we have. So during a bad time, you see this bot, for example, is averaging about 11.2% per month. You know that we have been seeing in our own corporate account about 3%, 3.5%, but this bot here is averaging about 11.28% a month. This second one that was open at the same time, 5.52% average per month. The third one here, which starts 72 days back, is averaging about 2.13% per month during this time, based on the performance during the downtime. This is another one that was opened only 22 days back. Again, this is averaging 21.4%. Maybe at this time we had more volatility, or this coin was more volatile. That's why it's 21% average per month. This one here, 4 days back only opened. So it's running for 4 days and it's averaging about 1.61. That's fine. You would have the ones that has lower profit. You would have the ones that have higher profit. But what I want to highlight here is that what time were those bots started at during what's so-called bad market. Look at this one, 4 days back, and it's averaging about 6.74% with the same formula, dividing this by this, like taking the daily and then multiplying the daily by 30 days and calculating the percentage. This one here, 3 days back, averaging about 15.28%. Last one here is 3 days back and it's averaging about 3.88%. If you see, most of them are over the average. If we look at the average of those, let's see down here if you can see, calculate the average. Yes, the average is 7.63%, which is more than the average that we normally see in our own corporate account. So this is a call to action here. The call to action is that don't wait for the market to do a specific behavior before you jump in, before you start bots. Number two is that when the market is down, there is higher volatility, always. When the market goes down, there is a much higher volatility than when the market is up or when the market is sideways. Because of the fear, because of the FOMOs. Basically, when the market goes down, you will have many people buying, many people buying because they think the market is at the bottom. They want to buy so that the price, when the price goes up, they can sell for profit. And other type of people, they are selling off because they feel the market is down and it's going to go deeper. So the fear, you have the fear and the fear of missing out. So both of them come together and you have this crazy movement in the market. What we do is that we don't care about emotions. The bot is doing what it's supposed to do. And we have seen actually during that bad day, I think a couple of weeks back when there was an announcement from Trump that increasing the tax with another 100% for China, then the prices really dropped crazily. In half an hour, it went down like 60, 70% for some coins. But during the same time, we have seen a bot of Yogi that made over 60% in profit. One single trade made 60% in profit because when the market went down, the bot was waiting and then it captured on that bottom of the market based on the retracement, no emotions, no guessing, nothing, just mathematics. Took that trade and the market just shot up after this announcement. It went down and then spiked up again, then it sold it at the highest possible point because again, the bot is waiting for the retracement, the pullback, the retracement before it closed. So it was going up, then captured on that. And we have seen like 60% or I think 40 or 60%, something like this. I'm not really sure about the exact amount of rise, but it's not less than 40 to 60% in single trades. So that what will happen if you have your bots ready with the market and you're not over leveraging, you're using the exact funds that you're supposed to use for the bot and so on. And I see Yogi is coming. We just mentioned him and he's coming on the Zoom now. So I see also Martin having question or comment. Yeah, Martin, please comment.
So I think, Dr. Ali, you have solved or helped with my hair growth. Because after looking at this example, my hair got excited and it's starting to grow. So for kicks and giggles, if you do me a favor, where it says capital of $62.52. Can you change that to 1,000, please?
Okay.
The 62.50.
In a way, Goenberg is going to change the formula. What I'm going to do is just take this down, and we'll make it based on the same percentages. So you want to make it 1,000?
Yes.
Okay. Let me apply the same formula here based on this percentage. So go to this, multiply this. This is where you're going, right?
Yes.
It's, again, the same 21%, 21.4%, but because the amount is bigger, the profit is bigger. Here, $13, here, $200. One step further, 10,000.
And we're talking, this happened in a 22-day period, correct?
Yeah, this is 22 days. But this is 22 days, but we divided that by the number of days. The profit divided by the 22 days and then multiplied by 30 to put the expected, based on the daily average profit, multiplied by 30 to put the expected monthly profit. So if it's 100,000.
And this is a down market.
Again, for me, down market will always go up and down. It's not, there's nothing to keep it on a specific price to keep going up and down. But how deep it could go, you don't know. How high it could go, also you don't know. So you better have your bots on to capture all of those movement, the upwards movement and the downwards movement. What I said is that when the market is down, it has more volatility. More volatility means more profit on the other side.